welcome to another live stream. In today's video we are going to be checking out the Fibonacci golden ratio and how it pertains to absolutely everything on Earth, and not only Earth, space and astrology as well. So this is the golden ratio. Now the golden ratio is your 1.618. It not only appears in nature, on the human body itself, made famous by Leonardo da Vinci. This is his famous mathematical book. It shows how the golden ratio pertains to nature and art. And let me just show you the Fibonacci numbers over here. So if you divide 34 by 21, we can do it over here. 34 divided by 21. This gives you the 1.618, the golden ratio. And to get the next numbers, you multiply any number, in this case the 21, times the 1.618. This gives you the next number, right? Rounded off is 34. If we go back here, we can say 34, right? So not only does it show up in nature, the human body, but also the markets. It tends to be an incredibly powerful number on the markets as well. So there are some very excellent videos to show you guys how, especially Google the golden ratio on YouTube. You will see some pretty cool examples. This is the golden ratio of the Mona Lisa, right? If you click on the head, you can see the perfect ratios, right? The top of the forehead and the eyes, the cheeks, and it gets smaller like that. The torso as well, you divide the head by the torso, and then the entire painting and all the lines, you can see the golden ratio line up perfectly. So we've shown you that. Now how the golden ratio works in the charts is you can use it in several different ways. So you can pull it from the bottom to the top of the market to see where value is at, right? So let me just reverse it because the numbers are kind of in the way right there. Let's put the values on the left. We can see the golden ratio 0.618 over here. This tends to show where value is at, and when the market gets into that area, this is where the professionals start to get interested in the market. Now in investing, you need more than one reason to take an investment. So the golden ratio, or the golden box, this is called, or it's called the this is where value is at, opportunity, whatever you want to call it, but this is when they start dollar cost averaging into the market. We can see from the top to where it starts is about 61% from the top, right? Institutions never buy the up markets. This is a good tool for them to start knowing where to start getting into the market, right? This is one way of using it, and I'm not a financial advisor, right? But this is one tool and probably the most easiest one to use. You can then also use the extensions. That is when you pull it from the top of the market to where the market finally found its bottom. And I'm just going to pull up presettings here. Now let me just show you what it looks like on default. So you've got all of these lines. What I simply do is, all of these lines are valid, right? I just remove the background, and when I'm doing extensions, I remove the zeros, the one with the zeros in the front, away, because that is the retracements. If there's a zero in front of it, 0.618, that is the retracements that show you where to buy. The extensions show you where to sell, right? So we can see the golden ratio was this line over here. we got some confluence in the market. This acted as resistance and it came down beautifully to act as support. Now these aren't definitive answers or definitive sell areas. It would just show confluence or some reaction in the market will happen there, and in this case it acted as resistance and then came back as support as well for this first bull run on Bitcoin. The top came in, I looked at it earlier, it was like at 40.618, so it's 40 times the golden ratio, right? And you can see how beautifully it peaked at the top. Now you would have never have predicted that that was the top, right? But at the end of the day it did top out at a golden ratio, in this case the 40. Then again the professionals will pull up their Fibonacci tool and trying to get back into the market, right? We'll just put the reload zone back on. Now I've got all of these pre-saved settings, but in this case you want the 61.8, the 78.6 level and the 88.6 level. This once again showed you where the professionals started to get interested. They don't buy up in the nosebleed section. They start getting interested when the market is down. Let's see how far down it was this time before they started buying. Once again 61.8% down. Now you can see the golden ratio or the Fibonacci tool is just a percentage down from the top, right? So 61% from the top, that is where the institutions start buying. And we can see that we created a little bit of traffic inside of the golden zone and off we went. Now if you dollar cost averaged inside of the golden box or the trade location, you would have made quite a good gain, right? Not catching the bottom, but dollar cost averaging inside of this area, getting an average price still got you a nice 5,000% gain. Now people that tell you they buy the tops and sell, they buy the bottoms and they sell the top, they're lying. No one, probably Richard Hart can say that he does those things, but either way it's practically impossible to do it, right? We got confluence at the 61.8. You can see how many times it acted as resistance, and when the market finally broke above it, the golden ratio, it came back to retest it again, and you can just see how powerful this level is. And when we finally broke it and found support, the market popped off, right? And then again you can do your extensions to see how far and what targets was hit. Let's pull up our chaos theory over here. Bitcoin exceeded the 8.77. Let's see if the 16 was valid. So the 16.88 was almost exactly the top for you. Let's see what the 6.8 did. So it's going to be a little bit lower. This is also a golden ratio level, and it closed at 18,000. And now if you dollar cost averaged in this area, got an average price, you still made 5,600%, right? So yeah, the idea is not to catch the exact bottom because it's practically impossible, but to get an average price in the reload zone, right? Many people think in the Hex community that we are in fact in this first part of the Hex cycle, right? Because we did make a 93% dip in this one. And this is kind of the retracement that we're seeing in Hex right now. So we can maybe do an extension to see in Hex what we might be expecting in the next bull run. So then again, the professionals pull up their Fibonacci tool and they wait for the golden ratio or the golden box to get back into the market. This was this area here, which started at 7,000 all the way down to 4,000, and we bottomed right below the 78.6 level at 3,100, right? And if you got an average price, let's plot it somewhere in the middle all the way up, you made a very respectable 1184% gain to the top. It's impossible to call the bots to actually buy the bottoms and sell the tops, right? Very few people actually get to do that. And then again, your institutional investors, they simply just pull up their Fibonacci tool, they dollar cost average into the market, which started at $20,000, and they're buying all the way down, getting a respectable average price, not worrying about getting the bottoms. And in fact, the granny investor, she does not mind sitting underwater because she has a long time frame, right? This just very simplifies the market much more. There's no need to stress about it. Yeah, we looked at the extensions, and then we can do the extensions again on this side to see how Bitcoin performed. And I think we closed very close to the 3.618. Yeah, so the 3.618, the third golden ratio, called the first top perfectly. And we can see the diminishing returns over time, right? And wherever this market bottom would come in, the institutional investors will pull up their Fibonacci extension, and if we go off past performance, we could say maybe it's hard to say that we're going to go above the 1.618, which currently sits just above the 100k. That would be very ironic if we simply just go up right to the 100k and then start our bear market again. But you can't have these exponential growths every season. It's practically impossible. And as you can see with the golden ratio, and these numbers diminish over time, right? It's like this eggshell. It starts big, times it by 1.618, 1.618, 1.618. It just gets smaller and smaller. And this is the story of the golden ratio played out right here in front of our eyes. Like the twisting seashell that gets smaller and smaller every time. These expansion waves get smaller and smaller every time. It's just unsustainable, and eventually it becomes so small that the market looks like the stock exchange, where you get 20% gains in a year, right? If you're lucky. Raymond, what's up? Morning. I managed to catch you live today. Good to see everybody. Thank you for coming. So yeah, we'll do the golden ratio today. We will check out some of the rest of the market. I should have said that earlier so you could have known what is going to happen in this episode. So we're going to look at the overall stock market. Everything looks pretty bearish. We can see the Dow Jones Industrial prices are going higher, yet the price is flat, or the indicators are flat and going lower. If you remember, this is bearish divergence, right? So it shows a reversal in the market. The overall market does in fact look like it wants to turn around, except for the altcoins, and Bitcoin is a bit bullish. This is the Bitcoin dominance. You can see that we're playing around with the golden ratio on the altcoins. When this goes lower, the altcoins do well. We're just ranging here, and when it goes higher, the altcoins suffer as people exit their altcoin positions to capture a move in Bitcoin. It can be either way. If Bitcoin dumps to the downside, people exit their altcoin positions as well. The most important chart probably is the S&P, right? We've been in this downtrend for many months. Let's measure this out. So it's been almost a year already, and we're technically still in a very bearish downtrend, right? And pretty much all we want to see is we need the stock market to bottom, right? For the pretty much the rest of the market to finally get out of the slump, right? I think we have, yeah, we do have bearish divergence here as well. Price is going higher, the MACD going down violently. So reversal is soon to come, right? The dollar index, we pretty much made a perfect double bottom yesterday. It really looked like we were about to drop out of the market. And as I'm looking at this right now, you can see price is going lower on the dollar, yet the RSI is going higher. So this is hidden bullish divergence, very bullish for the dollar and very bearish for the rest of the market. And this coincides with all of the other, everything else looking very toppy. Crypto fear and greed index, we are very fearful right now, and this is the maximum of all the fear. And you can actually do technical analysis on this. We're on a strong downtrend here, and when we eventually break down here, the price is lower here, but we're sitting around fear and not extreme fear. We were in extreme fear back in July, right? Let's just pull up the Bitcoin chart here. So back in July, we were more fearful. So we have a bit of divergences on the sentiment, right? People are more bullish here or less scared than they were back here. So it's interesting to look at, because maybe this indicates a little bit of bullishness in the market. Maybe we've been decorrelated with the stock market. Since the stock market has been rallying, Bitcoin was dumping, right? But this could be because of the FTX and the BlockFi, which is now filed for bankruptcy as well. So yeah, some different perspectives. What we can see here is, but this brings us to Bitcoin. What is Bitcoin doing? Bitcoin was going down here, but we had bullish divergences up here, right? This has now confirmed because the RSI has broken out. So Bitcoin in fact looks bullish where the rest of the market looks pretty bearish, right? If we go back to the Bitcoin dominance, let's just see what the altcoins might be doing. So we've got nice higher lows on the candle bodies here, which tells me, so no divergences yet, but it seems like the altcoins might have a run as well. So the altcoins will outperform Bitcoin a tad a bit. Hex has not perfectly, we closed the RSI yesterday at 30.15. I wanted it to be below 30 for a very good buy signal, because the stochastic RSI and the MFI was almost also in a very good buy area. So this might have been the good buy signal, a very sneaky one for Hex, or there is still a little bit of consolidation left to the downside for us, for these indicators to get nice and low. We're currently sitting at 34, but because the rest of the market is quite bullish, we are up slightly from yesterday, from where we closed yesterday, right? We've talked about all of the divergences yesterday on the weekly. It looks pretty darn good on the weekly, right? There is a slight divergence on the stochastic RSI for the daily, right? You can see the prices are going down, yet the stochastic RSI is going up. Let's just pull up the MACD. So I'm just using the, yeah, and we can see nice divergences here. Let me just make it big for you guys. Indicator is going up, right? Price is going down. So that's a good sign for a reversal, probably now or pretty soon, right? let's look at Hedron, a new low on this downtrend. Remember, we still have higher lows. We still have higher lows here because this wick was at 23 cents. So this is technically still a higher low. Although I don't like it that we made this wick. I like to go off the candle bodies. Now the candle body is without this tail. It's just simply the red box itself, right? And not the line at the bottom. But it's not technically that bad, right? So on Hedron, we came very close on all of the indicators except for the MFI wasn't below in the bottom of its range, so it wasn't the perfect buy, but we do have bullish divergences here of the RSIs going higher, the prices are going lower. So it does look like there's a reversal that is imminent. And not only that, we are inside of the value, or where value is at, right? The golden ratio. We've talked about that a lot today. So an investor will look for more than one reason to go long on a position. Now, this is not an endorsement for you to go out and trade this. You're responsible for your own decisions, right? So location, which is the golden ratio, is one reason. We now have bullish divergences, which is a second. Now, if the investor really wanted to go long on this, he would probably wait for higher lows and the break of that higher lows to go long on this specific idea, right? But the indicators wasn't at the best position, but either way, it wasn't terrible, right? This is ICOSA versus USDC. Very oversold on the RSI, but we were pretty oversold at the top up here, and now we've come all the way down. But down here is where you should be interested if you're interested in this coin, and not up here. But that's pretty much what the market does, right? They get excited up here and they FOMO. Up here in prices is at almost at $2, and they're not at all interested when the price has pretty much halved and so that sits at 60 cents, right? They're not interested up here. Now everybody's saying it's dead, it's failed, whatever, and this is where the professionals consolidate on this opportunity. So I think we've pretty much covered everything for today. Let's see if some of the altcoins are rallying. Yeah, so this is a good sign because some of the altcoins are doing quite well. This shitcoin perp, I wonder if this still trades. What is the date here? Yeah, so this is not trading anymore because this used to be on FTX, right? You can see Dogecoin rallying. I made a post about this yesterday, and you can see how beautifully it spent time inside of the reload zone. Dash up 5%, FTM. So yeah, some of the altcoins are catching a bid here. The decentralized exchanges as well. And Hex sitting at 26 cents. So let's see what you guys are saying. Zito, hi Hans, greeting from Poland. What's up, Poland? Paul C, thanks for all the sharing, catching you live for once. It's a pleasure, dude. I'm here every day. I'm trying to be going live at least once a day. So yeah, check me tomorrow if you can as well. How about Dogecoin? So we quickly looked at Dogecoin. It's rallying out of this area. Remember, when you see something like this pop off, especially from the bear market lows, you get this massive base. All you simply do is, and if you're interested in this, obviously X being my favorite coin, you just wait for it to get back. Let me not skip ahead. So you pull your Fibonacci tool from the bottom all the way to the top, get it all the way to the bottom, and then you just simply wait in this area, right? Because it doesn't matter if it's the overall macro view like that, But even on shorter time frames, you always wanted to get it inside of the reload zone or below the 61.8, right? Because that is where value is at. This is called the no split section, right? But if you're going off the overall market like this, for the granny investor, getting it at 29 cents is still a valid area, right? She got a little bit up here, a little bit at the 78.6 level, and then her next target is the 88.6 level. You're going to have to put that one in by yourself. And yeah, I mean, she gets it at these levels, and she simply sits on it, and she never invests more than 5% on any which coin of her overall portfolio. So if one of these coins go to zero, she'll lose maybe 5% of her stack. But if one of these does something amazing like Dogecoin tends to do in the bull run, she just sells half on a double, right? Half of where she got it. So if she got it at 9 cents, she'll be selling some at 18 cents. And the next one at 36 cents, right there. And the next one at 72 cents. So before this has even hit its all-time high, she's not only got a free position in this coin, because if she sold off, she's got her initial investment out. She can then go and put this in Hex or put it in Ethereum or Bitcoin and then store it in our hardware wallet, or maybe try and find something else that is still flat on its ground, making higher lows, or something that's still down like 96%, and that's not going to disappear, right? Yeah. And if we go off Gann theory, the market always tends back to the 50% of an initial move. So it needs to come back to 40. Eventually it will get back, and that's a 4x from here, right? And these concepts carry over to your investment journey in Hex or whatever. This is not the time to be scared, right? This is where you should be excited. I mean, look where the 50% is for Hex at 26. So if I'm just looking at Hex versus Dogecoin, this is a 9x, right? From where we are currently at, just to the 50%. And Gann theory states, and Gann is over 100 years old, right? This needs to come back here eventually. If it dies if this coin is to die, which I do not believe will happen, then it needs to get back to the 50% at least. And I'm pretty sure it's going to break all-time highs, and I'm betting on it. But that's not for you to bet on, right? Let's do that extension that I was talking about Bitcoin. So from the top to the bottom, wherever the bottom might be, if the bottom isn't in yet, you just readjust it lower, right? And the lower it goes, the higher the Fibonacci extension becomes, right? So if Bitcoin is to do, or if Hex is to do what Bitcoin did in its third cycle, that was like, what was that? The 40 extension? I mean, let's put up 40 here and see where it is. Because Bitcoin in its first cycle did a 80% dip, or a 93% dip, and made an extension all the way, like I just showed you guys. Should I go back to refresh your memories? Let's put up the candlestick charts. Let's remove everything. So yeah, in its first cycle, if we do this Fibonacci extension from the top to the bottom, you can see it went all the way to the 40, which was exactly at where the top came in at. A bit lower than the top. So would it be unreasonable to expect that Hex could do this in its second cycle, right? This was Bitcoin's first cycle, and this extension was its second cycle, right? So could it be, because I mean Hex is pretty much just a Bitcoin with a proof of work change, right? So if we go off that extension, $20 is very much in play, right? What do you guys think about that? I think it's very reasonable to believe that that is possible. Because the deeper the dip is, the deeper the extension or the next cycle is going to be, right? Just cleaning up this chart a little bit, just a little bit. If we do that, let's do these extensions on Dogecoin to see what it did in its previous cycles. Right, this was the 2018 top. And we can also see that Dogecoin perfectly hit its 40 extension, right at 73 cents. Perfectly indicated at the top, right? And from its first cycle in 2014, now this we traded in blocks here. It actually didn't perform that well, but I'm skeptical that this is valid because it doesn't have it's not showing lower than 0.001 or a tenth of a cent, right? Maybe it just TradingView doesn't have the data. So I'm pretty sure it went much deeper than this. Time will tell. Yeah, definitely, but I don't think it's unreasonable to do that. So because if we go to look into hex.com, Hex is outperforming what Bitcoin had done, right? Let's just wait for this to load. So ROI since launch, ROI from launch, right? So this is, let's remove all of the others, right? BNB, Hedron, Maxi. So this is just Bitcoin and Hex, right? And we can see in its first cycle, Bitcoin or Hex has already outperformed Bitcoin. And I don't know if this is all of the data. It probably is all of the data of Bitcoin's first cycle. And Hex's first cycle, we've practically outperformed, right? So Hex has its own market cycle. So yeah, I mean, why couldn't we see that kind of returns, right? Although we have been going on a bit longer in Hex, it seems like Hex's cycles are a lot longer than Bitcoin cycles are, or we don't have all of the data on BTC here. So we did 1,000x returns, or what's that, 10,000x returns? ROI, this is the ROI multiple. So where Bitcoin topped out at 327% ROI multiple since the launch, Hex did 1,000, or is that at 600? $670 it seems. So yeah, I mean that's my theory, and I think it's it's not over bullish at all if we just do a very simple extensions from where we are currently at, right? And let's be conservative and say $8, right? At the least. Yeah, another XE can agree with your analysis, Hans. Feel too good to be true, though. Yeah, it does feel too good to be true, but imagine how the people felt when Bitcoin did that, right? in its first cycle. They probably thought it was over because they've never seen something like that before, right? Because this doesn't look that bad because it's on the log scale, but if we do it like that, that looks horrific, right? This massive wick at the top. But this was still a 93% downtrend, and back then, even the stock market during the 1929 market crash only did a 89%. So before this, people haven't really seen an asset crash like this and then come back to do these massive gains in the future, right? And this was only the first cycle. I mean, it wasn't even the max gains that it did, right? It made another bear cycle and then a new high, which was, I mean, all of this is pretty impossible to believe, right? But that is the nature of cryptocurrency. It's just so overly impressive. And let's see how long this took to play out. 742 days, so like 2 years, right? So this video has been 36 minutes. I hope you learned something. I hope you enjoyed the moon math. So I will see you guys in the next video. Please like, subscribe, leave a comment down below. I read all of the comments and I reply to all of them. And I'll see you guys in the next video tomorrow. Cheers.